the classic crypto thing is you buy for £1, you sell for £20,000, you don't tell HMRC. That is tax evasion.
Yeah. So what are HMRC doing to kind of crack down on this? Because obviously that's probably a loophole.
Pressure on the big brokers.
A lot of people
on Coinbase and that. They put a lot of pressure on them to
And there are also
share.
other exchanges. Like there's so many crypto exchanges. Like might be in Russia, might be in Singapore, might be in France. So like you might not have jurisdiction.
Ultimately, it has to touch the banking system. If people want to get cash out, it has to touch the banking system. So you can get at it that way. And there's an OECD initiative which kind of does that, which will create automatic reporting. But HMRC screwed this up initially. So back when crypto just started to be a thing, we're talking early 2010s maybe, HMRC came out with some guidance that said crypto is basically gambling, so it's not taxed.
Yeah.
And I think they did that because they thought, oh, this newfangled thing the kids are doing, people are going to lose lots of money. We don't want to give tax relief for that, so we're going to say it's gambling. It was wrong as a matter of law, but I think a lot of people made a lot of money and didn't pay tax.
It was the good old days.
Yeah.
HMRC the wild, wild west.
HMRC then, as they often do, they kind of wake up with a start and go, what's going on? And they reversed course, and clearly it's taxable. But if you say to me, I've just bought some and made some money, is it taxable? Even if I didn't hear the middle bit, I'll say, yeah, it's taxable. Can't tell you exactly how, but it's taxable. So it's taxable. It's pretty easy how it's taxable for almost everyone. It's taxable as a capital gain.
And do you think that there's been improvements in HMRC's ability to go after people who are, because there's going to be people listening going, good luck.
Yeah,
do you know what I mean?
Definitely.
I mean, the thing about tax evasion is that HMRC can go back 20 years. So if HMRC in 10 years' time get records of your crypto transaction today, they can and will do you. And it's so much easier for them than cash in hand because it's all computerized. They can do it in bulk. They don't just send some inspector outside a kebab shop to count how many kebabs are sold on a particular day.
There's a record of it all on the blockchain.
So they could be quite chilled on the basis that they go, we've got years to figure this out, and we just go back and hit everyone.
The blockchain is forever.
Yeah, it's a record of every transaction.
If a tax authority has no clue, it's a great way to evade tax. But once the authority wises up, it's a really bad way to evade tax. So actually, the dark secret is that HMRC likes the blockchain because it's
records.
Ultimately, they can do it at their leisure.
But they can't backdate it to before they introduced, like when they thought it was gambling.
They can. Yeah, they can.
They can still go back and say
they're wrong. You see,
there's basically the whole history of crypto they can backdate.
So they can backdate.
They can go back, but before Bitcoin was
invented.
invented.
But there were no laws back then.
You don't need laws. Again, there
were no tax regulations back then.
There aren't now.
Go back.
There isn't a single tax. I think there isn't a single tax regulation on crypto. You don't need it. Capital gains tax applies to buying and selling anything. There's no capital gains tax on tables. But if I buy an antique table and sell it at a gain, I'm taxed. So pay your tax on crypto, definitely.
There was
and if you didn't, you should be voluntarily doing it because then you might escape penalties. If HMRC catch you, they will ding you with penalties. If you have a large crypto gain, find a good tax advisor, meaning someone with letters after their name.
Understand. That's the problem. My accountant's like, what are you talking about? None of them understand. There aren't really crypto tax lawyers currently.
You shouldn't need to be. There is nothing complicated about crypto for a good tax advisor. So maybe an accountant who's not a tax accountant wouldn't be able to do it, but anyone who's a member of the Association of Tax Technicians or the Chartered Institute of Taxation, they'll be able to do it. So look for a tax advisor who's ATT or CIOT, and if you have significant untaxed crypto gains, it's in your interest to fess up.
Above the tax-free threshold, would you say? Or
yes, I mean
the threshold's only $3,000.
Yeah.
It's dropped.
It's just tiny.
But significant is relevant, isn't it? Someone on minimum wage might have like 20K in crypto gains. That's significant.
But it used to be more. You used to get. I can't remember, 12,000.
Yeah, it used to be. Now it's this year it's 3,000.
So for someone making small gains, there's nothing. But there are quite a lot of people who made six-figure gains.
Yeah, exactly.
Didn't pay tax, and I would strongly advise them to go. I can't give advice, but I can. I would strongly advise them to
pay your tax. Contact.
You think it's coming at some point, and
I think they will get. I think they will get caught. Someone who got cash in hand for cutting someone's hair is probably never going to get caught. Don't do it, kids. But the risk of being caught is low. But here, the risk of being caught is high
because the digital records. That was a clip from our chat with tax expert Dan Needle. If you want to watch the full episode, you can click right here.